Looking for some panelists, by the way. So if there are people who are interested in being a panelist of the Podcasting Morning Show, hit me up and we can talk. I can't make any promises, but we are looking. All right. And where's Sid? Okay. Well, we are live on the videos, so we should officially do this. If everyone could mute, please. Let's rock and roll. Good morning, podcasters. Today is Tuesday, June 30th, 2026. And today, podcast expenses, tax write-offs, and hobby versus business. If you're investing in your show but still guessing what counts as a legit deduction, this conversation could save you money and headaches. So if you're listening live on Clubhouse, hit the share button, top right-hand side of the screen, and share it however Clubhouse lets you. And if you're catching us via podcast, YouTube, etc., please share this with a fellow podcaster. And now give us about 30 seconds. We'll get things rolling. Thanks for being here. The Podcasting Morning Show is powered by Ironic Media, helping podcasters launch, polish, and grow great shows. And by Content Creators Accountant, helping creators build real business behind their content. Good morning again, Podcasting Morning Show. Thank you so much for being here. I am your host, Mark Ronick. Currently on stage with me, my co-hosts, we have CPA Ralph Estep, Matt Bliss is back with us, and BC Babbles is here. And so is Sid Meadows, who just jumped on stage as I'm welcoming our cast and crew. And by the way, if you want to learn about these people, if they resonate with you during the show, there's something about them that makes you want to connect with them, just go to podcastingmorningshow.com/people, and you can learn about all the people, even some of those who aren't here with us today, but join us regularly. I need to clear my throat. Okay, I put myself on mute there for that. We can edit that part out.
Okay, Kermit.
Yeah, exactly.
Hi-ho.
Yeah, frog in my throat, but all good now. Just needed to hydrate, I think. So today, yes, it is Money Monday on a Tuesday. We're going to jump in with Ralph. We're going to do this style because if you've listened to us for any time, you know that Ralph usually leads the way. And I felt like, why not this time? Let's do this more like an interview style like we did with Sid a week or so ago, like we've done with other cast members. We'll just have a good conversation around this, and this is all sparked by something coming from yours truly. I'll explain in a moment. First, Matt Bliss has joined us, and Matt's on we'll call it a summer hiatus for right now, but I asked him to come join us this morning because he's doing something for a podcast that I guess is near and dear to his heart, and they have announced that they are going away, and I think Matt's trying to do something to keep them around. And by doing so, also a benefit to you as a podcaster as well. So Matt, let's jump in. Let me ask you, what's the story behind the podcast? Is called Help Me. Well, it's called Bug and Moss, and your promotion, your thing that you're doing is called Help Me Save Bug and Moss. Tell me the story behind Bug and Moss and what's going on.
Sure thing. Good morning, everybody.
Good morning.
So yeah, the thing that I'm trying to do really is to help the hosts of what is the Bug and Moss morning telephone show. They do a live show every day, and it's been great. And they've got a bunch of other podcasts that they've done in the past as well. Really creative people, those hosts. But at the moment, they're starting to encounter some financial hardship. So it's not the podcast itself that's going to suffer as a result. It's on the subject of money. They could be encountering some dire financial straits in the next little while. So I've taken it upon myself to, well, I can't donate the abundance of money they need, to donate my time instead. And as a podcast producer of many years and much repute, that that offering that I can make is in a significantly reduced rate for people who are looking for a podcast editor or to do a podcast audit. And I've had a few queries from people about other things. I can also edit video. Um, Generally, this package can cover any number of things that I'm able to do. The main thing is that I can make a bit of money for them and pass it all along so that they can stay on their feet for a little bit longer. So the core thing here is that the package I'm offering includes 5, digital vouchers or whatever that can be claimed for up to 60 minutes of a podcast edit or a podcast audit or something similar. And it's at about 60% off my listed podcast editing rate on my website, which makes it 750 USD at the moment. That might change over time depending on what people's needs are. But the main thing is that none of that money is going to me. It will be going to the hosts of the Bug and Moss morning telephone show, because they've given a lot to me and I want to help give back to them in any way I can. So if anyone listening or watching or on the call at the moment knows anybody who is looking to get into podcast editing, owns a business or has been an indie podcaster with a bit of money in their pocket and just said, "Man, I wish I could start a podcast. I don't know how to start with my podcast." Then recommend this on. The link is currently in the Clubhouse thingamajiggy. I'm sure it'll
Also,
be
will
in the
be in the
show
show
notes as
notes.
well.
Yes, it will.
Yep. And yeah, help me help them, really.
And
And
also to help you. Help me help them and let me help you at the same time, right? That in
So,
other
Matt,
that's
words,
it.
can I ask you a question? So,
Sure.
I'm sure that some podcasters are listening to this saying, well, have they monetized their podcast? Why are they looking for money all of a sudden, or is this something that's been coming on? What's going on there?
So the shows, well, in all seriousness, the shows that they've done in the past do pay a little bit, or have done. Um, the Mason, one of the hosts, has done Podcube for a long time, Digital Folklore, if you've heard of it, and he was employed as part of Eighth Layer Media for a long time. That was his full-time paid gig, which he doesn't have anymore. And Brooke, the other host, um, they're they both had full-time gigs for a little bit, and they're getting a bit of money. But as we all know, the economic climate is pretty steep at the moment. So if they haven't been able to monetize their podcasting and creative endeavors enough to offset what they would otherwise have as full-time work at the moment. And it just came at a really unfortunate time for them.
I see. Okay.
So yeah, I don't think we're looking for a monetization strategy unless you've got some Joe Rogan Diary of a CEO level, millions of Huel sponsorships on Intel laptops and that kind of thing. It's
Now, are there other
more just getting
producers
going.
also doing the same thing you're doing? Are they pitching in? Is there like a marathon or something to help them? What's going on there? Are you the only one that's really going out on a limb and doing this?
Well, they also have a Patreon, and that's where they've asked the majority of the current Bug and Moss followers and listeners and watchers to help them out where they can. But this is me off my own back. I
Okay.
don't think if I worked in concert with them, or if they would never think to ask me to do this. This is me trying to do something for them, leveraging my own networks and my abilities to be able to give back. So
very
yeah,
cool.
that's really what this
Okay.
is.
Yeah.
The ability to donate to them.
Well, very cool thing that you're doing, Matt. It's cool to see a podcast professional looking out for another podcast and going out of their way doing something like this. It really goes a long way. So very cool of you. And yes, like we said, this link will be in the show notes on today's episode. So check that out if you want to not only support, but also get a good deal on podcast editing. And some of you may say, but Mark, you do that and DR does that as far as podcast editing services. Yes, but we're all here to support one another, and I have no problem with it, especially when it's to help a podcast stay afloat. So kudos to you, Matt. Yes,
Mark, it's
DR.
kind of interesting because this is one of the major differences between the podcasting genre and the television genre. There's very little competition in podcasting. It's very supportive. And in television, I think that you're always fighting against whoever is in your same time slot. And it's a little bit more cutthroaty, you know.
Yeah, exactly.
Um,
I mean, there's certainly people out there that feel very competitive with whomever in this
right.
field, but yes, by and large, it seems that this industry, it does not compete, and it's more of a collaborative space than a competitive one.
It really is.
Yeah, absolutely. Cool. All right, let's shift some gears. Thank you again to Matt Bliss. And here's why I want to have the conversation. If you go back to the opening of the show and this whole idea of tax write-offs and business expenses, it's all because last week I sent Ralph a voice note via text with a real question from my own business. And as you may have heard me mention here recently, I told him that I've been thinking about taking up DJing, right? Not radio DJing, like playing music for people, the easiest way to put it. And well, at first, my idea around this is it's a hobby. It's just, I do love DJing for people. I have friends that ask me to DJ at their weddings and events and stuff because I just really enjoy finding that vibe, making people dance and get excited, etc. So I thought I would up level that a bit. So it would be a hobby. I'm not looking to go play at concerts and stuff like that. It's something creative, something fun. And what I'm talking about as far as the expense is that club DJ style, the 2 decks, mixing the music, playing music for people, creating a vibe. And there's some equipment that I'd need to buy, and it's probably in the neighborhood of like $300 to $500. So I was hesitating to purchase it as a personal expense. So several few $100 ain't nothing to sneeze at, and I'm not necessarily in the best position to be just dropping that kind of cash. And then I thought to myself, well, I wonder if this could be a business expense. Could I buy it through my company, Ironic Media? Would it be considered a legit enough business expense to count, right? And Ralph got right back to me saying, absolutely. It's a legitimate business expense, and it could actually be a write-off as well because I'm in the business of media and entertainment. And that got me and Ralph thinking. A lot of us as podcasters and creators are constantly buying things or wanting to buy things that may sit in a gray area, or you may not have even thought about as being a business expense or write-off. Like a microphone makes sense, a camera makes sense, and DR knows editing software makes sense, and courses, maybe. But what about DJ equipment? And I know you're not necessarily looking for DJ equipment. Maybe more realistically, it is a course, or maybe it's a trip to a conference, maybe a certain one happening in August called Empowered Podcasting. Or maybe there's just some kind of new creative skill that you want to invest in. Do you have something, DR?
Yeah. So if, God forbid, if you were ever audited and you had to talk one-on-one with Mr. IRS or Miss IRS, and they said, well, how does these decks, how do these what do you call them? Round tables? How do these turntables even come into your podcasting business? Well, I mean, would they get that granular? Would they ask something like that, Ralph?
All right, well, wait, let's pin that for a second because that's a great question, and I want to really take a minute to get into that. So, yeah, and so great question. Thank you for asking that, DR. And so, yeah, when I'm talking about here is, for me, it's DJ equipment. For you, maybe it's a course or a trip to Empowered Podcasting in August, or maybe you're investing in some sort of creative skill that you want to enhance or learn for the first time. Gear for something that starts as a hobby, but could become content, networking, live events, or maybe revenue. So today, we're going to use the DJ deck question as the launching point into a much bigger Money Monday, or we'll call it Money Tuesday conversation. So, and that question, when does a hobby become part of your business, and why does that line matter? Right? That's kind of where DR is going with this. So, Ralph, before we get into DR's question and many others here, let's start with a quick guardrail. Okay, because we're having an educational conversation today, and everybody's individual tax situation can be different. So, what should people keep in mind as they listen today?
Well, first thing is, number one thing, Mark is a client of mine, so I'll disclose that first.
Yes.
So when Mark asked the question, I had a lot of back information, and that's the reason I was able to answer the question so quickly, because I know Mark's situation, I know Mark's business, so your business may be different. And that's the thing I want to say at the front end. The information I'm going to share today is general knowledge. You need to talk with your specific accounting tax person. You're welcome to reach out to me at contentcreatorsaccountant.com. You can schedule a call with me. But the information we're going to talk about today is general in nature. So I want to start there. The reason that I was so quick to answer that, Mark, is first of all, I was in front of the barbecue. So I was sitting there making some grilled chicken, and I got this voice message, and about 30 seconds into it, I'm like, I already know the answer. This is what I've been doing for 30 years. So for you, I knew you were already in the media game. I know what you do for a living. And the thing, I'll pivot a little bit to DR's question. We don't have to get that specific in, well, is this the same business you're always in? I look at Mark's business being called Ironic Media as media and entertainment. So as soon as he said that, I said, DJing isn't random for him. It plugs straight into live events. It plugs straight into audience engagement, networking, and branding. And honestly, $300 or $500 isn't a lot of money when you look at the grand scheme of what Mark will probably end up spending if he does this seriously. He's probably going to spend a lot more than that. But the interesting thing, Mark, is I'm going to call you out on your question because it was an interesting way you said it.
Okay.
You said, Ralph, I was thinking about paying for this with business money. I'm not sure if I can write it off or not, but is it okay to pay for it with business money? And the good news about that is you are going in the right direction from the beginning. And that is, if you're going to have a business, and I was in Pod News yesterday with the blog that I wrote about this very topic. We'll put it in the show notes. But start off with the idea of you're going to have a business. Create a business account. So Mark, you are already going down the right direction when you said, Ralph, I'm going to use business money for this. Yes. Number one, ding, 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 ding. Great. Second thing you said is this a write-off? And I'm going to challenge you a little bit. If you're paying for it with business money, I want you to assume it's a write-off. If it's not going to be, then I don't want you paying for it with business money. So that's the right thing. And then the next thing I said to him was, Mark, get scratching. So, but just to also answer.
You sent me some AI renditions of me DJing.
I did. I think you and I came up with the Supersonic Ronic.
Yes, that's the DJ name.
So I've already bought the domain. No, I'm just kidding. I didn't buy the domain. But.
Full disclosure, Supersonic Ronic was the name I came up with when I was a kid and wanted to break dance. Like I took break dancing lessons and all that, and I gave myself the name Supersonic
Ronic. Oh my God,
Ronic.
I feel a challenge coming on.
All right, dude, I can see it now. You had the cardboard, you had the parachute pants, right?
100%.
And you had the big old, what do they call that? The thing you're walking down. Boombox, man. I can see it now.
Yep.
Supersonic Ronic coming live at you.
So, Ralph, I'm kind of embarrassed to ask. I think it's a stupid question. So, is it because he has the word media in the title of his business? I have the word media in the title of my business. What if it was just ironic podcasting?
That's a good question.
It wouldn't change my mind at all because the argument could still be made. So let me back up and answer it this way, DR. I say this to clients all the time. If you can prove it to your grandmother, then I'm good with that. Because most people won't lie to their grandmother. And if there's some connection between this and your business, I mean, Mark is in the entertainment business. It doesn't necessarily need to say ironic media. I understand the business that Mark's in. I understand, honestly, he could use that turntable for his podcast. He could mix up music. I mean, the whole point is, can you make a legitimate business argument for this? If Mark had said, look, yesterday is my wife and I's wedding anniversary.
Oh, geez, what a coincidence.
Yeah, see that? And if he said, look, I want to buy my wife a brand new, beautiful diamond ring. And can I pay for that with business money? I'd say, Mark, you're going to go to jail like Al Capone. So no, the answer to that would be no. But you understand the difference, DR, is
Yeah.
that this is very clear. So if DR, you said to me, Ralph, I do podcast editing. I'm thinking about buying a new desk. Okay, well, that to me makes sense because you do editing. You have stuff sitting on a desk. You've got computers
Right.
and all this sort of thing. So think about it from the standpoint of what is the intention? The intention is what really matters in this discussion.
Okay. Okay. Got it. Thank you.
And Sid has a question, and so does Rez. So let me first go to Sid. Go ahead, Sid.
Good morning, everybody.
Morning.
I'm sitting here pondering, listening to DR, wondering if she's got some secrets she needs to reveal because she seems so scared of the IRS. And I don't know, but
I have
that's
been audited before, and
ooh,
it was not pretty.
ooh.
I had spent several years in Asia, and I had just come back, and they caught me, and
Caught you, huh?
and the guy looked at me from across his desk, and he said, "You know, what is the Helmsley? Who is the big hotel heiress?
Leona Helmsley.
You know Leona Helmsley? We put her in jail, and we can put you in jail too."
Oh
I
my gosh.
Oh,
it
wow.
scared the caca out of me. I am telling you, I just went ballistic. And when
That
I got to
reveals so much.
Oh my
It
God,
reveals
when I
so
got to
much.
work that day, which had a whole bunch of lawyers and stuff, they all said, I would have looked him straight in the eye and said, "Get me your supervisor. Get me your supervisor right
Ooh.
now." And
Mm.
just, but who knows to do that? I mean,
Yeah, especially in the
yeah.
moment when you're
Oh
freaking
my
out.
God.
Yeah, I hear you.
Freaking out, way freaking out. Yeah.
Go ahead, Sid.
Okay, so that wasn't my question, by the way. I just like picking on DR in the morning. So, good morning, DR. Thank you. So, Ralph, because I think there's some confusion, would you please explain the difference between a write off and a business expense?
So there really isn't a distinction in my mind. If it's a business expense, then you are going to write it off against your business income on your tax return. Is that what you're asking me, Sid? Because I don't really believe
Yes.
there's a difference between the two. And that's what I was calling Mark out on, not to give him a hard time. But if you're going to pay for something with business money, the expectation is that's going to be a reduction in the revenue. You pay taxes based on the net income in this country. So anything that you're paying for with business money that is a legitimate business expense, i.e., becomes a write-off.
And thank you for, and I just asked that question for clarity for the listeners because Mark's using the term write off. In my business, I use the term business expense. I knew that they were the same, but I thought it would be great for you to explain it because I think the use of the term, I think, can confuse people that, oh, I can buy this and write it off at the end of the year, but it actually is just an expense, like buying that desk that you talked about. That's an expense for your business. And so you buy it with, as you said, business money, and that reduces your taxable income.
Yep. Thank you, Sid. And Rez, good morning to you. Did you have a question?
Yes, good morning, Mark. I just had a suggestion.
Okay.
So, as Ralph, I think, pointed out, if you justify this as a business expense, then you can write it off. So, what I'm saying is, if you have an episode on your show about teaching people how to get started as a DJ, and you have me on the show, there you go. Bingo. That's justified. What do you think?
I I think yes. Okay. Yeah, sounds good to me, Rez. By the way, someone's asking also a question here. Oh, it was BC. BC, do you want to ask the question that you put in the chat? And by the way, thank you again, Rez.
I would. So I'm curious now, and I just put it into the Clubhouse chat too. So can we take this scope to then determine that attendance to and even being part of the Creator Partner Program for the Empowered Podcasting Conference also a business expense?
And let me just say the Creator Partners Program, this is like a sponsorship package, if you will, for an easy way to explain it, where content creators are offered a discounted, again, I'm just kind of trying to make this easy for you, a discounted rate to be a sponsor, to get some of that sponsorship recognition that the big sponsors that pay more money regularly for. So we're trying to do that, this as a way to pay it forward to our fellow content creators. So go ahead, Ralph.
Yes, absolutely. That is a legitimate business deduction. the cost to attend the conference, the travel cost to get there, your hotel rooms, any incidentals that you spend. Now, here's the thing, BC. Make sure you're keeping track of all those expenses, pictures, right? Who you spend time with, all those things. But absolutely, and the sponsorship itself, in my view, is an advertising expense. I'm one of the title sponsors of the event. I spent quite a bit of money to do that, and that is an advertising cost that, like Sid said, that's a business expense. Absolutely.
Awesome.
Now, to clarify as well, I think I mentioned this a while ago. I'm taking that week as a staycation at the locations for the event. So to put a caveat in there, I'm probably gonna have to consider the days prior to the event separate, not a business expense, but the days of the actual conference can be considered part of those expenses. Correct?
Well, not necessarily, because you could be creative. And you and I might have a dinner or something like that. We might have a lunch prior to the conference. So I would be creative and think about ways that you can extend that out. You're getting FaceTime in front of people. You're building your brand. Now, look, if you said to me, Ralph, I'm going to go to Hawaii. I'm going to spend 3 weeks in Hawaii for a 2-day conference. You and I are going to have a different discussion. But in
Right.
this particular case, if you're picking up a day at the front, a day at the back, I really don't see that as being an issue as long as you're handling it correctly. Business credit card, business account, documentation, receipt evidence, pictures of you at the conference, why you were there, those sort of things. That way you have a narrative. Think about it like when we do podcasting, we have a narrative, what we want to talk about. You want to do the same thing with your business expenses and your records.
Right. Absolutely.
Thank you, Ralph, and thank you, BC. We've got Billy on stage, and then I have another question for you too, but I'm going to hold that and go to Billy first. Good morning to you, Billy. A question, comment? Go for it.
Yeah, I get a question. I was like, well, first of all, I was thinking like, how hard is this, guys? Like, you spend some money on your business, you can, whatever. But then you started talking about getting creative, Ralph, and I'm like, oh, you know what? This might be a good question. So I create content about different products for different companies. And so sometimes those products need other products. So I just bought a truck, a Toyota Tacoma, 3rd gen. The first thing I did was reach out to a bunch of companies and say, hey, I just bought this truck. Send me all the accessories to it. Now my question is how creative can you get to say, hey, this truck is now a write-off because I have it to make products and accessories, and I have to have this particular model of truck to do that. So when you said the word creative, I'm like, well, how creative can we get? I'm not scared of the IRS. Let's go.
So, Billy, I want to address 2 things. One of them you probably weren't expecting. If they're sending you those things and you're not paying for those, that's income to you. So anytime a company sends you a product that you are going to use, that needs to be declared as income to you. Now, if you get the product, you use it for content creation and you donate it to somebody, then you might be able to not do that. But that wasn't the question you asked, but a lot of people don't think about that. It's gotten a lot of influencers in trouble with the IRS because they got free stuff. So first question that you didn't ask was the free stuff. You want to address that. As far as the truck goes, I think that's a reach. And the thing about the IRS, they don't really like creativity. Now, that said, I think you could argue that maybe mileage, if you're driving that truck to demonstrate the accessories that they sent you, there's definitely something there, but I would be really cautious about writing off the whole truck, Billy. I think that's going to get you into hot water with the IRS.
But what about?
I appreciate that. Well, no, I was going to say I appreciate that. And then I do have a question about the free product after you, Mark.
No, go ahead, Billy.
Okay, so I totally understand the claiming the free product on your taxes. So that's something I do and comfortable with. The question I always have though is like, I get this free product, and they're always like, oh, it's the fair market value of the product. So say somebody sends me $100 item, and it's it's worth the value is $100. I sell it for $1 on Whatnot. Am I taking a $99 loss on that? Like, that's always the part that confuses me, because I'm like, well, if I give this thing away, like, at what percentage is that written off? And then, or if I sell it for a complete loss, or a $99 loss, like, I don't understand how that works. That's where I always scratch my head a little bit.
Billy, what I would do is if you get a free product and you turn around and sell it, I would say the income is the value of what you got for it at the sale. So use that example. You got a $100 product, you turned around and you sold it for $1. Then the argument can be made one of two ways. Way number one is you got $100 in income, and then you've got a $1 sale and a $99 charitable contribution. You could make that argument if you gave it to a legitimate 501c3. The other argument you can make is that, yeah, I got this product. It was garbage. It was no good. Wasn't worth the $100 they told me it was. I sold it for $10. Then rather than claim $100 as income, I would claim $10 because that is truly the fair market value of the product, because you turned around and sold it. You've got receipt evidence to prove that what the company said it was worth is not necessarily what it's worth in the real market.
Okay, cool. Thank you.
Thank you. And so back to Billy's first question. I mean, so Ralph, I see companies, I know of companies, and I know maybe this is getting even further out away from podcasting, but we are talking about a business, so let's stay there. What about businesses that have company cars? Like, I see that all the time, and they're not necessarily businesses that, you know, are using the car to haul stuff, right? They're using it just maybe to get from point A to point B, to get from this business meeting to that business meeting.
This is a big red flag area with the IRS, actually. And I have a lot of small business clients who say to me, hey, I'll give you a great example. I won't speak about who it was, but I had a client, he says, I just bought a Porsche 911. He said, because this is a fancy car and I do fancy work. And he says, can I write that off as a business expense? I said, good luck with that. I said, because you're going to go up against an IRS auditor that drives a Ford, and they're going to look at you and go, oh, a Porsche 911? I don't think so. Mark, here's the thing I would say to answer that question. There's a lot of people that do things that don't necessarily make them correct. But now that said, if you are a Terminex company, like you go out and you spray for bugs and you've got a car or a truck to go from place to place, that's legitimate. Mark, if you are in the business you're in and you said to me, Ralph, I'm going to buy a work vehicle and you're going to use it to travel for work things, then that's fine. As long as it's titled in the work name, there's insurances in the work name, you're keeping receipt evidence of it. Is it predominantly business use? That's the other thing we need to talk about. Is it more business use or personal use? Because what ends up happening, and I see this a lot of times with the content creators, there's a lot of stuff that's that blurry. Is it personal? Is it business? Make sure you're documenting the business use of that. Now, I may have went around the bend to answer that question, but that is where you have to really take a look at what is the business use. And that's the whole point of today's discussion, is start to put an eyeglasses on of like, how can you make this business use? Now, and I use the word creative, and I apologize if that came off like I'm trying to help you structure transactions. That is not what I do. When I say being creative, I say think a little bit deeper than the obvious and say, well, how could I make this work? If you're going to 10 extremes of trying to make it work, again, you're lying to your grandmother and you're going to get in trouble. Like DR said, you know, the IRS is a very, intimidating. They know that, and they use that to their advantage. I like what Billy said. He says, I'm not afraid of the IRS. I'm not afraid of the IRS either, because I document, I have receipts, and I pay attention to details. And I want to call out something Cindy put in the chat. She says that I take a lot of clients to coffee or lunch, and I'm not very good at keeping up with receipts, but it's on my credit card statement. Is that good enough? The answer is no. Unfortunately, it's not. And a lot of people think that's the case. Well, I'm just going to give them my bank statements. I'm going to give them my credit card statements. That's not good enough. They want receipt evidence. In fact, Cindy, what they want is they want a picture of the receipt. And what I tell people to do is take the receipt, flip it over, and write down who you were with, why you were there, and what you talked about. Take a picture of that. Everybody's got a phone in their pocket now. Take a picture of that and store that, because the answer to the question is no, it's not good enough. Because if the IRS audits you, they're going to ask you for receipts. You could say, well, look, I just saved and listen, everybody does this, so I'm not saying it's not true, but everybody says, well, I got the statements, but the IRS could say, wait a minute, yeah, I see you got a statement here for Starbucks coffee, but how does that prove what the business expense was for? Who were you with? What were you doing? So Cindy, I don't mean to call you out, but you asked a question, and it's a very common question that I get. You need the receipt, and the easiest thing to do is take a picture of it, why you were there, who you were there with, and what you talked about.
But Ralph, the receipt doesn't answer those questions that you just threw out there, like who I was with and what were we talking about?
It does if you flip it over and you write on there. here's what I did on
see.
that receipt. And then you take a picture of it at the same time, Mark. It's better than nothing. It's better than saying to the IRS, well, I just have this box of receipts. But that is the best thing to do. And what happens is, you think about it, you're setting a precedent. So when I represent clients in audit, I love it when I can overwhelm the auditor with receipts, because what always happens is the auditor says, oh, there's nothing to find here. This person is I's are dotted, T's are crossed. I'd much rather go into an audit like that than the one to where I say, I don't have any receipts, because then the IRS is going to dig. They're going to go back multiple years and it gets ugly quick.
Interesting. Okay, so I see here that we have multiple questions. So let's do this. Let's try to do this rapid fire round. I'm doing that just to reset the table so everybody can think quicker. So we can try to get to everybody's questions. Now, I'm going to go to Sid first, and then I know we had something from Janaid. We have something from DR and BC. So Sid, take it away.
Thank you, Mark. I didn't actually have a question. I just had a comment to make.
Sure.
I actually, my vehicle is leased through my company. This is the second or third one that I've done. Long talk with my accountant about it before I did it. And so it's in the company name. The insurance is in the company name, and I predominantly use it for company business. So it can be a really smart decision. The first time I did it, we had a really long talk about it. So it doesn't, not as many hoops, I don't think. But anyways, it's something that I think works really well for me. So I was just going to add to that comment.
Thank you, Sid. And I'm going to jump in with another question based on, Ralph, what you shared a moment ago. So what if a podcaster hasn't been saving all those receipts and they're hearing you right now and they're like, oh, crap, I needed to do that. I want to do better, Ralph. What should I do, though? I'm not going to be able to recover all these receipts. I've been podcasting for a few years now. What do I do?
Well, the first thing you want to do is, tomorrow is July 1st. It is a great time to start a new way of looking at things. A lot of people say, well, in fact, I recorded a little short that we're going to put out today about July 1st. A lot of people wait till the 1st of January and say, my New Year's resolution. So if you're listening right now and you've not done this, today's a great time to start. And it doesn't have to get complicated. Start doing that today. Now, what can you do in the past? Do your best. Go find what you can find. Something is better than nothing. The number one thing, if you hear nothing else I say today, go get a separate account for your business and make a generous effort to always pay for it with that account. Keep the thing separate, because I can then say to the IRS, we have a personal account and we have a business account. That goes a ton further than if everything is all what we call in the accounting trade commingled. Commingling is like the IRS hit the lottery. Man, they love that. But Mark, to answer your question, do the best you can. Try to resurrect those records. The cool thing about most of the things now is so much is internet commerce. You can go back to the vendors and ask them for receipts. You can go look in your deleted emails and find receipts. But the key to that, now, the other thing that is going to be blunt about this is find somebody like me to help you. Find somebody like me to show you, to build a system from the front end. I just work with DR to help her do that very thing. It doesn't cost a mint. The money that you are going to spend with me is going to save you 10 times over if you do this correctly. And so, the old adage of, well, I didn't know I had to do that. Well, ignorance of the law is no excuse. And I don't mean that being ignorant, but it's just a fact. So you can change the dynamic. Today is the best day to start that, Mark. So to answer your question, start today. Go do what you can in the past. Don't live in fear. Like, I'm not one of these fear mongers. The chances of you getting audited is very, very small unless you're a bonehead and you intend to do something where you're going to get caught. Those are the people that generally get audited. Or if your income is in the higher income levels, the IRS knows they're going to target people who make more money because they have more money to pay tax. So for the average podcaster, the average content creator, if you're doing the right things, you're reporting the income you're getting from Patreon and the platforms, the 1099s, then generally you're going to be okay. Just don't be ridiculous.
I think Ralph just called me a bonehead, but I'm not sure.
That was not directed. No, DR, you're the opposite of a bonehead, because you're the opposite of that, because you recognize that you had an issue. And you said, I need to change the way I'm doing things.
You're a recovering bonehead.
Yeah, and I encourage people to, and I want to make sure that I'm on brand about this. I am not somebody that ever tells somebody they're stupid. I'm not somebody that ever tells somebody that they're making dumb decisions. I'm the person who wants to put my arm around you and say, hey, how can we make this better? And so that's exactly what I did with DR. I sat down with DR through the screen on the Zoom call, and I said, DR, here's how we can do this. And, there are, it's kind of like when you get a raw piece of wood and you take a piece of sandpaper to it. You just take a little sandpaper, you knock off the rough edges. That's what I do for people, but you got to start somewhere, Mark.
All right, let's keep it moving. I did say rapid fire and didn't adhere to that. Junaid, you're next. What did you want to ask or comment on? Giving you a second. Junaid, 3, 2, 1. BC.
Sorry.
Oh,
there we
wait.
go.
Look at that. Just in
I
time.
had my hands full with all these groceries.
That's
I'm picking
okay.
up. So my question was, okay, I bought the Porsche, but I use it to travel to business meetings, and it's strictly for business use. Does it still make sense?
So my answer to that is, in that particular case, that's a luxury vehicle. I think you're going to get yourself in trouble. What you could do is you could reimburse yourself at the standard mileage rate. The IRS every year publishes a standard mileage rate. As I recall, it's 72 cents this year. So if you keep a mileage log, now a lot of people don't understand what that means. It means starting odometer, ending odometer, number of miles, where you went and what for, then you could take a legitimate business deduction for the standard mileage rate. The IRS is going to question, do you need a Porsche to get from point A to point B? I'll throw one out there, though, you hadn't thought about, Junaid, because I've actually been working with a content creator that's thinking about doing this. They're thinking about buying an RV, and they're going to fit this RV with a recording studio inside so they can take their podcast, their daily show on the road. In that particular case, that RV is a couple $100,000.
Yeah.
I think we can argue that and win that in the IRS if we needed to, because it's a legitimate. They have a legitimate business. They're doing this on the road thing. So, and this is what's true of anything. You got to understand the facts and the circumstances and make sure it makes sense and that you can prove it.
So, Ralph, what about, so I know, at least from my past working with other accountants, when I talk about a podcast studio in my home, right? Like, I'm thinking about the RV situation, and I'm thinking about, in the past, what I've been told about having a studio at home. I can't write off my whole house, but I can write off the square footage of the area of my home studio. So is that what would happen in the case of like you're describing with the RV?
Absolutely. I think you'd have to delineate a percentage, because that it's not all. And in that particular case, you might do it based on not only the square footage of the RV, but the amount of time. Like, I'll give you a great example. I work with a lot of clients that have in-home daycares. And in-home daycares, it's not just the square footage, it's the amount of time that kids are present in the home. So I would say in that case, there's 2 tiers of where we can look at it. Again, facts and circumstances and justification. But yeah, Mark, if you have a studio in your home that's used for your podcast, I believe you could write off a percentage of that as long as it's reasonable. But here's the thing, it's got to be exclusively used for business space. So if you've got a space that's like an extra bedroom that when the grandkids come over, they crash there, that's not exclusive space. It needs to be specifically exclusive space. And here's where the IRS gets people. It cracks me up. The IRS will say, well, give us pictures of what's in that room. I had a client I represented one time, and I said, I will not give this picture to the IRS because there's a set of bunk beds in there. That's not an office. That is a second bedroom.
Interesting.
Ralph, how often do these percentages that you're allowed to write off, how often do they change?
I guess it depends. I mean, if you're changing your house, if your house square footage is changing, if you've shrunk down the amount. DR, here's what actually happens most of the time. Client comes in and says, Ralph, I work from home. I said, great. Do you have a space that you use for the business? I use the whole house, Ralph, because some days I sit in the kitchen and work. Other days I have storage stuff in the basement. I've got boxes in the garage. I've got a home office. That's not going to win. You've got to look at what is the exclusive, regularly used space for business. If you've got a 10 by 10 office, then my opinion is 10 by 10 office, whatever the percentage of that is versus your square footage, you can write off the utilities for that space. You can write off repairs and maintenance. You can write off any costs related to, if you rent your place, you can write off a percentage of the rent, all those type of things.
Okay. So what about, I now have a team that works for me, certain things that they do. When I pay them, is there some kind of a write-off that I could do for that?
So two things. Number one thing, if you're paying somebody, are they an employee or a subcontractor?
Sub.
And why do you think they're a subcontractor?
Because I said so. I don't
Okay,
know.
well, no, and I'm not being smart. I just had a client in yesterday. Don't assume if you use the word somebody works for me, that's like a big ding, 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 red flag. The IRS thinks you have an employee.
Okay.
If they are a true contractor, what that means is they have their own license and insurance. They set their own time and all that thing. They use their own tools and equipment.
Yes.
If that's what we're talking about, then a couple of things, DR. Number one thing, you want to get a W-9 form from them because you're going to have to send them what's called a 1099 form at the end of the year. You're going to have to keep track of every dollar you pay that person. And at the end of the year, before the end of January, you're going to talk to somebody like me, or you're going to create these 1099 forms and mail those out. If you're able to do that, then those expenses for the subcontractors become a tax deduction against your business income. What gets a lot of people in trouble is they pay somebody $20 here, $50 there, $200 here, and they don't ever get that information at W-9. The end of the year comes, you realize somebody like me calls and says, DR, you paid Mark $2,000 last year. We need to send him a 1099. And Mark is gone. Like, you can't find him because he doesn't want any record of that. So make sure you're collecting that W-9 at the front end, but understand the classification. Because if you've got somebody that works in your area that uses your tools and equipment, they don't have their own business license and insurance, that person isn't an employee. They're not a subcontractor. And that gets a lot of small business people in trouble.
I've got two follow-up questions. What if that person is offshore? And what about when I pay myself? It feels funny to ask this, but is that a write-off as well when I pay myself?
First thing, offshore doesn't really make a difference to me. We can spend an hour talking about that particular topic, but generally, most of the people you're talking about, as long as they're presenting you with an invoice and you're paying an invoice, you're fine. As far as paying yourself, that is a very complicated question because it depends. Are you a sub? No, but if you're a single member LLC and you pay yourself, that's not a deduction because you can't pay yourself a payroll check through a single member LLC. Okay. If you're a subchapter S corporation and you're paying yourself a reasonable salary, then the answer is yes, that is a legitimate business deduction. That is a very in the weeds question. I don't mean to bounce around it, but that is a fact and circumstances question. That gets a lot of people in trouble because a lot of small business people who operate as a sole proprietorship or a single member LLC, they'll come into me and they'll say, Ralph, yeah, I took a payroll for myself all year. We got to write that off. No, you can't do that.
Okay, thanks.
Thank you, Ralph. By the way, we just had somebody in the chat. Drew asked, "Can anyone tell me how to get the video option? Where are these guys speaking from?" Yes, go to podcastingmorningshow.com/join us, and you can find the different ways you can catch the video streams or the podcast when it comes out a few hours after we go live. So great question, Drew. Thank you for asking that. And I know BC has something too. BC, I'm coming to you in 1 second. First, Ralph, I've been thinking through this conversation that I know we have some people that listen to this show that their podcast, whether they consider it such or not, that's another story, but their podcast is really more like a hobby, right? Or at least it's not really being treated a lot like a business. Where do these people fall in this conversation? Like, let's say somebody was similar to me who does have a podcast and is interested in DJing like I am and wants to go get that deck. Like, and I know that you probably have to know a lot more about them, but generally speaking, like, can they write that off if they wanted to?
It depends. And, as with anything in podcasting, it depends. I have a belief that even if you're going to operate your podcast as a hobby, do the things I'm talking about today. The reason I say that is at the worst case scenario, you could write off expenses against any income you have. Let me give you a simple example of that. So let's say that this is not a money profiting venture. The IRS is not going to allow you to write off expenses if there is no intention to make money. That's their big thing. It's like there's a 9-part test. We can get into that, but their big thing is there an intention to make money with this? If you go into this is a hobby, this is something I like to do, then make sure you're still documenting those things, because you might get that 1099 from some one-off thing, or somebody might send you a product. Technically, then you have to report that as hobby income. Well, if you've got those expenses that are legitimate hobby expenses, you can at least offset those to get yourself to a zero. They're not going to let you drive it negative. They're not going to let you make it a less than zero. Now, where that becomes an issue is a lot of people say, well, yeah, but eventually this is going to be a business. You can actually have revenue minus expenses to be a negative in your business. That's a legitimate thing. People lose money in businesses sometimes. The IRS has never said, well, you've got to be a good business person. They just have to say, are you in actively pursuing business? The IRS is going to look at your behavior and your intent. If this is your, like, I'll give you a great example. Like Matt was talking about helping these folks out. I'm assuming their main job is their podcast. So if they are having expenses related to their main job, then those things are deductible. If this is some sideline you do every Thursday night when the wife is out doing grocery shopping or something like that, then that's a hobby. But do keep track of the income and expenses, because you have to report it even if it's a hobby.
Thank you, Ralph. Appreciate that. BC, what do you got for us?
I just wanted to give Ralph his flowers for a little bit, because I think he's done such a great service to a lot of content creators. The first time he broke down the fact that free stuff is not actually free stuff. I think a lot of content creators see successful content creators who get massive PR boxes filled with dozens of products, and they're like, oh my God, all this free stuff. And then you learn what Ralph shares with us, and you realize, God, how much does that one box cost now? And thankfully, not too long after the first time he introduced us to that fact, I was able to reach out to a colleague of mine who's media correspondent, travel, lifestyle content creator. She got her first PR box and was so excited. And I was able to be like, oh, wait, by the way, just in case you didn't know, you got to report that stuff unless you do this, or that. And she was like, I had no idea. Thank you so much. That goes back to Ralph. So thank you, Ralph.
You're welcome, BC. And that's the thing. That's the reason I got into this gig, is there are a lot of people in the content creation field that just don't know what they don't know. And I do know that. I've been doing it for over 30 years. So that's the person, I'm the person you want to go to. You know, it's interesting. You know, there's a lot of people just don't know. And that's why I'm here to help. So thank you, BC. I appreciate you bringing that to my attention.
Absolutely.
Yeah, and Ralph, let's talk about that as we wrap up here. I think this.
Can I just say one thing though, because
Yeah.
I see Dan Schultz has now said I'm the kingpin of this stuff. So something is spreading like wildfire here.
I think Dan was listening to our
No,
pre-show conversation.
I just think it's funny. It's all good.
For those who don't know, I have said that I think Ralph looks a lot like the actor who plays the Kingpin in the Daredevil Born Again series. So I think that's the reference. Anyway, where I was going with this, Ralph, is what are some of the most common deductions that podcasters specifically, in your experience, what do they forget about? What are those common deductions?
Website. If you've got a website for your content creation, that's deductible. If you have a media kit, that's deductible. If you have a public relations person like Cindy is for me, that's deductible. Any sponsor decks, invoices, contracts, all of those things are deductible. If you're using your internet, listen, everything we do is internet-based. Subscriptions to AI, subscriptions to Descript and Riverside, your cell phone, clothing that you wear only for podcasting, be careful with that one. Anything that you can say there is a legitimate business reason for this, then use that as a deduction. But again, start with paying for it with the business. I'd rather be in a case where Mark and I sit down at the end of the year and I go, Mark, I got some red flags on a couple of these. Let's have a conversation about these, dude. I'd rather be in a case where you paid for it with the business money first, and then we decide not to take it as a deduction, than to be in the case of, but Ralph, I've got 3 other personal accounts. Is there anything over here I can take? That gets ugly, and that gets in the mud really quickly.
Thank you, Ralph. Appreciate that. Does anyone else have any other questions for Ralph or comments, anything like that? I see we're getting lots of flowers for Ralph today. We've been getting them over on YouTube as well, Sambaza being one of them. And also, how do you pronounce this one? AJ goes to college. That's the handle. It's all one word. So
it's actually AI goes to college.
AI goes to college.
Yeah, that's Craig Van Slyke. Craig and I have known each other for a long time, but I appreciate his comment as well.
Yeah, absolutely. Yeah, thank you. So Ralph, what let me go to you. I don't usually do this for a quote unquote interview, but this isn't your typical interview either. What do you think are some takeaways from today's conversation that you really want people to walk away with?
Very cool you asked that question. I'm going to give you a roadmap, and I'm going to give you 6 things on a roadmap you want to pay attention to. Number 1 thing, open a separate business or bank account today. Do that today. Second thing, track every single dollar that comes in and track every single dollar that goes out. Third thing we haven't talked about at all, get an employee identification number from the IRS. It's an EIN number. It's super simple. Go to irs.gov and apply for that. Fourth thing, understand the structure of your business. We had a little side talk with DR. Are you a sole proprietorship? Are you an LLC? Are you an S Corp? Talk to somebody who understands those things and decide what's the best for you. Number 5 thing, set aside money for taxes. The number 1 problem I see with content creators is April 15th comes along and they panic because they've got income that they haven't set any money aside for and it's spent. And the last thing is talk to an accountant who actually gets creators. There are a lot of accountants out there that are very good accountants that don't work in this area. I work in this area. I live in this area. I do content creation. So talk to an accountant who understands the nuances of what we're talking about. That's true of any industry. There are specific accounting people for each individual industry. Make sure you're talking to those people. The people at the big box accounting houses are not going to understand the nuances of what we talk about today. So separate accounts, and like we said a little while ago, Mark, start today. You may have a train wreck behind you, but the tracks in front of you can be super clear if you make a decision right now. And you don't have to spend hundreds and thousands of dollars. It can be something as simple as an envelope that you put receipts in. It could be a simple spreadsheet. It could be go out and get one of the accounting tools that you can and apps you can buy. But just make sure you're doing something, because what you're going to end up doing, and we haven't talked about self-employment tax, it's a whole nother discussion. The more income you have, it's not just federal and state tax, it's also self-employment tax, which, ready for this one, that's an extra 15.3% on whatever that income is. So these are big numbers. So if you're setting aside money and you don't have a lot of receipts, plan on paying close to 40% of what you make in tax. That's why you need to talk to somebody like me who can help you on this process before you get too far into it.
And stay away from TurboTax.
Yes, I know DR speaks. Oh, and so does BR. Speaks from experience.
I love TurboTax because it keeps me busy the year after everybody files their returns. So I'm not going to sit here and speak negatively about TurboTax. And I'll say this. TurboTax in its very nature is good software. The problem is it talks you into deductions you're not qualified for, because it's like, I have clients now that are using AI to do their taxes, and I just chuckle. I just think that's funny, because guess what? When you come in to meet with me, I'm going to tear it apart and you're going to end up going to pay me to fix it. So you got to understand what you're doing. And that's the thing about these online tax softwares. If you don't have a baseline understanding of what it's asking you, then that's why it's leading you down a path that's going to get you in trouble.
Thank you, Ralph, and thank you, everybody, for a great conversation today. This one, lots of engagement, really excited about it. And yeah, we will continue to squeeze Money Mondays in to our format. And I say that because, of course, Mondays and Fridays, we take off during the summertime. So we will continue to do things like this to get more insights from Ralph and other people from our panel as well. So with that, reminder that tomorrow we're back at 8 a.m. Eastern Time, covering all things news and comment around the world of podcasting. We'll share some of the headlines that we think would be important for you to pay attention to and share our thoughts and opinions on that. We'll hear things about monetization options. We'll hear things about where listeners really are finding our podcasts these days, and learn a little bit about some other independent podcasts that are doing some crowdfunding and lots more. So come join us tomorrow, 8 a.m. Eastern at podcastingmorningshow.com/join us to catch us live, or to find the links to find the podcast a few hours later. So until tomorrow, make it a great day, everybody. Take care. Great job, gang.